YouTube, what's going on, man? It's your boy Prolific, aka The Prolific Trader, and I'm back again with another video to close out the month of September with a weekly recap. Right here in front of us, we got the micro E-mini Nasdaq futures contracts. The trading date is September 27th, coming up, and as usual, I normally wake up around 6 o'clock in the morning, so I got the trading view back testing feature going on. So I'm gonna just show you some of the plays I caught. Remember, I'm not instructing you to trade or not giving out any financial advice, man. I'm just going over some plays on how I play it or how I would play it if I was you. All right, so we coming in right here to the 6 o'clock time frame. So normally this is when I'm up. I'm checking. I'm like, all right, right here I got a initial London high, so you'll see me mark that. And normally how I trade, man, I hop in on the 5 minute to 3 minute for my entries, and I'm looking for a run on liquidity, probably like on the 1 to 4 hour time frame. So I like to consider myself a low time frame, high frequency scalper. I know that's like a mouthful, but hey, 9 times out of 10, I'm on the anything under the 15-minute chart, and I'm just looking for a quick position to get me in and out. Um, kind of got away from holding those whole 100 to 200 point moves. Right about now, I'm just a super crazy scalper. 20 to 60 points, and I'm in and out. Stop loss no more than I say a 20 to 25 point stop loss on the extra futures. So right here, I like to see that if I have a bearish vibe or a bias, London has to set the high for me. So that's why I marked the London high. Now on the New York Open, that 9:30 Eastern New York Open, you will look for a price to come and violate the actual London high. So I just sit back and just normally just play the trades, and you're gonna hear that thousands of times, man. Trading is a game of patience. We just waiting for our setups. So we coming into here. I don't think I had any crazy important news releases this date that I can recall. Actually, I did. Now, even though I see price setting lower lows, I'm still waiting. For me, the area of liquidity right here is the London high that was just set. So we're just gonna wait for just a run on that high, and then we're gonna look for the first break of structure down to the downside, and we're gonna enter off inefficiency, imbalance, or FEG, whatever you want to call it. Once again, yes, I do trade ICT's smart money concept. I've been doing so, and it's the most profitable strategy that works for me. I ain't knocking support and resistance, Wyckoff, or supply and demand. It just the smart money concepts work for me. And we're just gonna fast forward a little bit. Just waiting for a run on liquidity. All right, we got the market open. Boom. Right here. Now, right here on this 5 minute time frame, you see how London has been violated. Now, look at the wicks it left behind. All right, it's not a clear closure above that edge. You're going to see the markets do this time and time again. It's not a clear closure. This is the three minute time frame. Now that I see that this price is kind of rejecting London's high, it ran those previous sales stops. And the market likes to run price in one direction, which is the manipulation, and the continued downward. Boom, clean breaker structure right here for me. We can call it breaker structure, market structure shift, whatever you want to call it nowadays. But you see the swing low. Once again, I got multiple swing lows being broken. All right, multiple swing lows being broken. So we just label that. I got swing low right here violated, and a swing low right here being violated. And this transition over to the M5 as well. So we got one criteria. We got the market structure shift. Gonna fast forward a little bit more. Got a bearish bias already. Current trading time. Current trading time. We at 10 o'clock. So you are into ICT's silver bullet window for the AM for the New York AM session. All right. I do have a fair value gap left behind. I guarantee if I was on the 30-second or the 1 minute chart, I would probably be in this trade already. So I do got an inefficiency left behind. Once that the inefficiency or the fair value gap, as he calls it, is a 3 candle pattern. All right. All I'm doing is marking it. I'm just moving in slow motion. And as you see right here, price will do this sometime on the indices. In fast market conditions, and you got the indices running in one direction, it's inefficient price delivery. All right, it didn't give freaking sellers the opportunity to sell or buyers the opportunity to get out of positions. Boom, I am now triggered into the trade. As you see, price returned up. I am on the 3 minute time frame. Now I got two confluences, so two extra criterias of why I got in this trade. It's not only the FVG, but hey, we can run a let's run an OTE field. For those of you that don't know, the OTE is the optimum trade entry. All I want price to do is to crack that 50% level or equilibrium, as stated by ICT itself. So it cracks that 50%. I'm an aggressive trader, so it cracks that 50%. I'm gonna get in. I'm gonna set a 20-point stop loss and aim for a 1 to 2 short position. We in off this 20-point stop loss. And honestly, I will be looking to target. This will be TP1, and TP2 would be, I like the halfway in between the standard deviation and the 0%. To me, the overall draw on liquidity for the day would be the previous day low. I like to target previous day lows and previous day highs as areas of liquidity as well. So I'm gonna fast forward a little bit. And you would have took minor heat. Like it did trade up to the 6-2, so hey, you could stack more positions. And we broke down. Like once I said, hey, you don't want to find yourself in a trade. For me, once again, for me, I don't want to find myself in a 20 to 30 minute scalp. It don't even sound right. Like scalping should be in and out, 15 minutes the most, in and out, and I'm done. Boom. Take profit, achieve. It's as simple as that. I gave you like 3 criteria. We had the market structure shift, market structure break. It left behind price inefficiency, known as the FEG or imbalance. Traded back into optimum trade entry. All right, we did drop the field from the swing high to last swing low after it broke structure. Price traded above the 50% equilibrium. Actually tapped into the 62% optimum trade entry. On this position, we would have had about 12 points of drawdown, 12 points of heat. All right, and then price broke structure down aggressively, and all we did was target TP1, was these equal lows right here, and TP2 for me. I can see a low over here, but I always, one of my criteria is I like to take profit between the standard deviation. I honestly think that the previous day low is the current draw. Like when you see price move this aggressively, normally that's what they're seeking, because it's buy stops resting down there. Look, price trades back up. Dibble around. This lunchtime. Lunchtime normally price action gets a little sloppy. Breaks back down. Previous low taken. So after I see that a previous low is taken, it's like, hey, I go into like a mind reset. And plus, it's coming up on 1:30. I'm trying to be done trading for the day. I'm not trying to sit here and look at charts all day. All right, price continues to trade lower. I'm done trading. Hey, it's just an aggressive sell off, so they just running all types of liquidity to the downside. So, hey, let's go get ready for the next trading day. All right, going into the next trading day. All right, we just got finished selling the Nasdaq. We're getting ready for the next trading day. So I automatically reset my charts. I'll go find my previous day low. It's just a simple, just drag it over. It don't have to be perfect. You could turn your freaking what's that called, the magnet on. You use your shortcut keys. I'm not that efficient on trading view like some of you all are, but it is what it is. And I want to note what price did. So not only did price sell off yesterday, but it returned back into the intraday high. So what this is telling me, in my opinion, is that they're temporarily done with the sale program. Market makers have generated or engineered enough liquidity to run price down low. So all this is a wick on the daily. It came back and took out not only the London high, but it came out and took out the New York AM high set. So that was a classic reversal right there. I really don't catch too many reversals. If I was on a chart for the PM session, I maybe would have called it, but like I said, like 1 o'clock, 1:30, I'm normally done with trading. I'm just normally what time I'm rolling out of bed. Getting up and looking like, all right, what did London do? See, London sold off. Um, we're going into New York AM session already. I see that they ran London lows. So, after yesterday, I seen the aggressive sell off and the market buy back up to close the day out. I low key got a bullish mindset, so I'll probably be looking more interested in buys for this day, just based off the wick that the market left. All right, this is a Thursday 8:30 news release would be unemployment data. I don't too much like trading news releases. Aggressive sell off runs equal lows right around here. We did not run the previous day low, but we did run the intraday lows set so far. So, hey, like I say, man, it's a game of patience and waiting. I would look for energetic price shifts after the New York market open. All right, it's just a little bit after market open. Price has shifted down a lot. I would look for impulsive interjected move to the top side for a long entry. All right, initial breaker structure right here, left behind price inefficiency. Let's see if we can get in. Nope, price is running away. Okay, we failed to break that high, but I got a nice little P array left here. So, and a draw on liquidity for me would be that would be a nice little target at the -50 standard deviation. I do have a fair value gap, which meets one of the criterias. I got a nice little PD array. We already shifted structure. Once again, we on a low, we on a 3-minute time frame. So this is kind of a big. I'm gonna have to leave room for the stop loss a little bit on this, and I don't want to, but the stop loss is gonna be a little big on this, bigger than normal. Sometimes you'll hear a lot of people say you gotta let your trades breathe um, on the Nasdaq. So I probably would have reduced risk on this trade, and this would be TP right there. That's the previous day high, and we looking. We're running a 50-point stop, so we're looking at a nice little 1 and 2. Let's see if we can get tripped in on it. We still not in. Still didn't. Oh, we broke in. Actually, it broke all the way down to the 7-9 OTE on the standard deviation. And look, this is a great confluence right here. Price breaks the previous swing high left behind. Hangs around. Oh, TP, quick 1 and 2. And that's all I'm looking for, man. Once again, you enter the trade and you want to see price aggressively move away from your entry in a timely manner. That was a quick entry on how I closed out last week. Bullish, as I was bearish September, October, indecisive. But until next time, trade smart, trade with a plan. It's your boy Prolific, and I'm out.